Hi, everybody. I'm David Asman. First up tonight, $10 a gallon. Well, here's a headline from today's New York Sun. It may seem a little far-fetched. There's the head, a sawbuck. That's a $10 piece of change there. It may seem far-fetched, but just think back a year to the skeptics of $100 a barrel oil. Oil hit just about 120 today. So is there anything we can do as a nation to prevent paying $10 at the pump? Phil Flynn is an oil trader and vice president with Aileron Trading. He joins us in New York. And Chris Nelder is editor of Energy and Capital and co-author of Profit from the Peak. Gentlemen, good to see you. Phil, hey, first to you. One thing we could do, by the way, or one thing oil companies could do, at least those oil companies abroad, is to straighten up their act. They're so inefficient that if companies in Venezuela and Saudi Arabia and Mexico became more efficient, we'd have 25% more oil, right?
Absolutely. I mean, let's take a look at Mexico and these other countries. These state-run oil companies are a mess. I mean, look what's happened at Russia. Russia was the great hope as an alternative source of oil away from OPEC. You know, then you had Putin go in there, kick out the oil guys. Now their production has even fallen. The bottom line is that the state-run oil companies have been a mess. They've been a disaster, and they're really cutting into what supply could be out there.
But Chris, if we can't convince these foreign companies to become more efficient, and we continue to live with $100 oil right on down the line, right up to $200 oil, will we see $10 a gallon soon?
Oh, easily, David.
So is there anything that we can do to prevent that?
I don't believe so. All the focus has been on the supply side for a long time, and we've reached the point where the world is on a global plateau of oil production. We've been there for about 3 years. We'll have about another 2. And at that point, supply will be permanently maxed out. So I think the solutions going forward are all on the demand side.
Well, you say permanently maxed out in 2 years. That sounds pretty early. 2 years. How much oil do you think is left for us to tap into?
Well, we've used about half of the global amount of oil that will ever be produced, and now we go down the backside of the Hubbard's Peak in about another 2 years.
2 years, but Phil, look, we should mention that this is a highly disputed topic. You get people on all sides. Here's a piece by Nansan Saleri in the Wall Street Journal a couple of weeks ago saying we've only used 1 out of 12 trillion barrels of oil so far.
And I have to think he's probably closer to being correct. In
Saleri is.
Yes, I believe so. And no offense to our guest here, I kind of call the peak oil guys peak freaks. No offense, but the bottom line is they deny history. If we believed that what they said back in the 1970s, based on current usage and technology, we would have been out of oil today. But what we're finding right now is that new technologies are bringing more oil to the market every day.
You're talking about the technologies to get oil out of sands and all that stuff.
Well, absolutely, but also deep water drilling. If you go back just a few years ago, it would have been unthinkable to think you could drill more than 90 miles into the ocean to get a barrel of oil. But now that's a realistic possibility. And David, most of this great globe of ours, if you spin it around, is full of water. And I think there's a lot of oil under there yet to be discovered.
So, Chris, when you combine the new technology with the fact that there are a lot of new discoveries being made in Brazil and elsewhere, your figures are way off. We have much more than just 1 trillion left.
Well, the amount of total oil that will be recovered will probably expand as time goes on and new technologies are brought to bear. But really, what we're most concerned about is the rate of oil production. And at about 87 million barrels a day now, I think it's possible we'll get up to about 90 million barrels a day over the next couple of years, but I don't think we'll increase the rate much beyond that point. And so,
but let me just stop you there, Chris. Why do you think we will not increase the rate much above what it is now?
Well, it has to do with the historical production figures from various large oil fields, and the U.S. is a good example. When you plot out the production of these various oil fields and you add them all together, it becomes pretty clear that the production rate is nearly maxed out.
But Phil,
so
as
the
you
amount
were
of-
saying before, I mean, whenever we hear these figures in the past that we've maxed out and everything else, despite the inefficiency of the foreign oil companies we were talking about, you still have new technology that comes online.
You do, and one of the best ways to bring it on, Chris, is high oil prices, and that's something we didn't have for a very long time. But
So
yet,
when